Hello World Wide Web, my name is Ara, this channel is RozarasInvestments. I don't know what to make videos about, so I just make videos about what I'm interested in, and I hope you guys like it. So far, 300 and something of you have subscribed, so I am very, very happy with that number. So, today I am studying a company that I've owned for a while now. This is actually a company I found for my friend about 6 or 7 years ago. But recently it's dropped. So the symbol is RES, if you want to play along, and it stands for a company. The name of the company is RPC, which is the first initial of 3 different companies that they acquired a long time ago. Long time ago. So RPC. So let's see, I'm going to tell you exactly what I own. Kind of a disclaimer before I start the video. I have so many different things. Okay, so the symbol is RES. The official name is RPC Energy Services. And right now, well, it's after hours right now, but it closed at $14.69. I originally became interested in this company. Let me look at a chart real quick, just so I can talk intelligently about it. I originally became interested in this company in recent history, not from a long time ago, but in the last year or so. When I saw that oil companies were kind of rebounding, and this company was in the, let me see, it got up to about 25 or so recently. So from about late 2015, so over the last 3 years or so, it's had a steady ride up from about the $10 range to about the $23 range. So the chart is going up and to the right. So I thought the chart looked very nice, and they were losing money for a little while. They were starting to make money again. They're still growing revenues, growing earnings, what I like to see. But it seems like in the beginning of 2018, when the whole stock market went down in January, this company never recovered. So they dropped down from the 23 range, now they're down in the 14 range. And I'm kind of trying to figure out why. I don't really understand why the stock is dropping, because they are making more money than they were a year ago. And a year ago, they were making more money than they were a year before that. So, on the Seeking Alpha website, oh, I didn't tell you guys how many shares I own. Let's see, I own 200 shares of RES. I own a strike 14 call option, which is expiring September 21. And I also own a strike 16 call option. I'm sorry, I own 4 strike 16 call options, but those are worth very, very little, 25 cents each, so that's only $100. So yeah, 4 of the 16s, 1 of the 14s, and I own 200 shares outright. This is a company, I just wanted to buy options because I thought it was way too cheap, but then I was like, wow, the shares are only, 14, 15 bucks each, so I can just get a couple hundred, and they pay a nice dividend while I hold on. Who knows if it's going to pop back up again. So having a nice dividend is good while you wait. So I'm on the Seeking Alpha website, and I'm looking at the conference call, and I'm just going to kind of talk and tell you guys what I see. So let's see. We got a whole bunch of people talking. I don't even remember who the CEO is. We got Jim Landers, let's see, Rick Hubble, one of these guys is, Ben Palmer. All right, so let's see. Ben Palmer says, thank you, Rick. For the second quarter, revenues increased to $467 million compared to $398 million in the prior year. Revenue growth, always a good thing. Revenues increased due to higher activity levels and a larger fleet of revenue-producing equipment. EBITDA for the second quarter was $119 million compared to $110 million for the same period last year. Operating profit for the quarter increased to $75 million compared to $67 million in the prior year. I think there was a typo in this. So now they have $8 million more operating profit. Our diluted earnings per share were 28 cents compared to 20 cents last year. So One thing I'm noticing is that their diluted earnings per share went up by 40%, 20 to 28 is a 40% increase. But their EBITDA only went up from 110 to 119. So some other stuff happened. This could be stuff like reasons, tax reasons, one-time charges, one-time income or expenses on the balance sheet. Or it could be that they bought back a lot of shares, causing the earnings per share to increase faster than the actual earnings. So that's probably one of those three reasons. To be honest, I'm not too interested. I don't really care. I'm a long-term shareholder, so I just like that they are growing revenues, and growing earnings is good too. Cost of revenues during the second quarter was $312 million, or 66% of revenues, compared to $254 million, or 63% of revenue. So their costs not only went up in total dollars, but it went up as a percentage of total revenue. So their costs are increasing very, very fast. That's a $60 million increase, give or take. Cost of revenues primarily increased due to higher employment costs, materials and supplies expenses, other expenses. Selling, general, and administrative expenses were $42 million in the second quarter compared to $40 million last year, so that's only a slight increase. As a percentage of revenues, these costs decreased from 10.1% the prior year to 9.1%. So even though their administrative expenses increased, because revenues increased so quickly, as a percentage, these are not big increases. And they're actually spending, as a percentage, they're actually spending less on those expenses. Due to leverage of higher revenues over primarily fixed cost. Depreciation and amortization was $40 million during the second quarter of 2018, decrease of almost 3% compared to $41 million. I don't really care about reading about depreciation and stuff. All right, let's see. Their technical services segment revenues for the quarter increased 16% compared to the second quarter of the prior year, due to higher activity levels, improved pricing for our services, and a larger fleet of active revenue-producing equipment. Operating profit increased to $75 million compared to $70 million in the prior year. Okay, that sounds good. Support services segment revenues for the quarter increased 35%, while operating profit was $1.3 million. That is written really weird, which compares to an operating loss of $3.3. It says $3.3. I mean $3.3 million in the same period last year. Okay. So that's good. They had an operating loss in that segment, the support services segment, and now they have operating profit. On a sequential basis, our second quarter revenues increased again to $476 million from $436 million in the prior quarter. Revenues increased due to larger fleet of revenue-producing equipment and slightly higher activity levels. Both of those two reasons for revenue increasing are good. One, you do like to see higher activity levels. Obviously, you like to see customers using your services more. But the first one that they mentioned too, their larger fleet of revenue-producing equipment, you like that because you see that the company is investing in itself, which is a good sign for the company's forward outlook. RPC's operating profit during the second quarter was $75 million compared to $60.8 million in the prior quarter. Cost of revenues during the second quarter, and these are, I don't put as much into these comparisons, but it is nice to see. I like to look at the year-over-year comparisons, not the quarter-over-quarter comparisons so much. But it is good to know. And definitely for tech companies, when, like one of my companies, YY, it is really good to know how many new subscribers they get every quarter instead of just comparing to how many they had a year ago. And I think that's really good for companies like Facebook, Twitter, companies like that. Let's see. So anyway, $75 million compared to $60 million in the prior quarter for their operating profit. Cost of revenues increased during the second quarter of 2018 increased by 16 million or 5.6%, due primarily to higher materials and supplies. That happens. The world is, usually there's nothing you can do about costs going up, those type of costs going up. Expenses associated with higher activity levels. As a percentage of revenues, cost of revenues remained relatively unchanged. That's decent. Let's see, technical services. I'll just try to pick up the highlights. Okay. Okay, now Rick Hubble talking. Thank you, Ben. RPC continues to partner with its customers to improve operational efficiencies and provide safe services. Yada, yada, yada. They did approve a 10 cents per share dividend. Now for a $14 stock, 10 cents per quarter. I'm sorry, 10 cents per share. So that's 40 cents a year. So that's about 2.5% that you're going to be getting paid to wait. That's decent. That's probably about average for dividend paying companies. On a $14 stock, 2.5% is average. So for those of you that don't know, they did pay 10% the prior 2 quarters, I believe. Before that was 7 cents. Before that was 6 cents. Before that was 5 cents, 5 cents. And they did cut the dividend a couple of years ago. So they seem to be on, well, the last 2 quarters they didn't raise the dividend, but the few quarters before that they did raise the dividend. So if I had to guess, and I'm just a guy, I'm just taking a guess, I mean, take that for what it's worth, I would say this is the 3rd time they've approved 10 cents. I think they might go for 4 in a row, and then after that they might reconsider things, and if they have a bright future outlook, they might raise the dividend again. Okay, first questions. Well, we're going on 11 minutes, 12 minutes now, so I won't read all the questions. But yeah, I just thought I'd make a video just reviewing. I just saw a link about the conference call, and I am late to the party. I own a lot of stocks, and I'm a pretty busy guy, so I don't read all these conference calls immediately. But yeah, if you go to the Seeking Alpha website, I'll actually put the link into the description, so if you guys want to read it yourself. I do try to skim through these. I probably own about 40 companies, and I pay attention to 200 different companies, so I definitely don't read all of them that I should, and that's just because I just don't have time to. But yeah, I'll put the link in it if you want to read it, if you want to check it out. Symbol's RES if you want to trade along with me. Thanks for watching, thanks for subscribing, and if you pick up some shares of this, let me know, and we'll be in the boat together. Bye guys.